All right, all right. This will be the last episode of the week, so I'll try to pack in all of the information that I think is relevant to get you through Thursday and Friday. But today was a very interesting day because we had CPI data and FOMC, and because of that, FOMC did not have that much of an impact. Most of the move happened from the gap up in the morning, and while SPY was up 0.82% today, a lot of that move was the gap up because we actually closed just a little bit lower than the open. So not the typical amount of volatility that you're accustomed to on an FOMC day. However, still a very interesting day nonetheless because we did gap up to a brand new all-time high, which brings back that 100% guarantee that this gap is going to fill at 537. So right then and there, you're automatically assuming, are you taking that short trade because you know this gap is going to fill? Or are we going to go a bit higher and then come back down and fill that gap at a later date? So this is going to be a lot of the conversation around the price action and trading this is how many bulls are willing to buy up here at 541, which is the price target that we were looking for above 537. But are you a bull that is willing to buy with an open gap with absolutely zero price discovery, which means that we have never seen SPY between the gap of 537 and the low of the day right around 540.3. So that means price has never existed in open market hours, and when price has never existed, the market does like to retrace back to those levels and make sure that there are still buyers in this zone before continuing any higher. So my preference and what I think is likely going to happen is I think we will see an inside day within the candle of today and then likely go finish the gap fill by the end of the week. So by the end of the week, I will not be surprised if SPY is back down here at 537. So to make that very obvious, I think we're going to get a little bit of an inside day and then we'll come down and fill that gap and we will see SPY finishing up the week at 537. That'll also put us back inside the Bollinger Band because we did gap above the Bollinger Band and close outside the Bollinger Band. So we also have more reasons to believe we're a little overextended and we could likely come back down to that 5 EMA very quickly. So there is a very good chance very soon we will fill this gap at 537. So that's what I would say laser focused on in SPY. If we do continue higher and we hold above 541, then we can possibly push that next price target higher at 547. But again, things are looking very overextended here. When you weigh the risk to the reward, it is getting very hard to continue to be a bull up here because the risk continues to rise and the reward is getting smaller and smaller. I can confidently say that the reward to the upside is becoming smaller and smaller as the risk to the downside is surmounting to be larger and larger, and we still have gaps that go all the way down to SPY 512 and 506. And these gaps typically do fill, so you automatically have to assume what kind of market we are going to see that is going to fill those downside gaps. So those are things you should be thinking about now and starting to make sure you have a plan to get risk off when this bull trend does decide to roll over. We could see a very drastic correction. So take it seriously. I'm not trying to scare you. We still have a bull trend and we can still go higher once we get this pullback. But I do want you to have a plan on how you are going to manage risk if we get a very deep correction. If you don't think a deep correction is possible, then nothing I say is going to change your mind anyway. It is very common in bull markets to get corrections before we go any higher. So watch that very critical level at 537 if we get the pullback. If we cannot hold 537, the next critical level is all the way down here at 531. So it's very easy to manage a risk between 537 and 531. If we lose 531, I think the bull trend is looking very weak and likely starting to roll over. So that by far is the most critical risk level. But while we're up here, I would manage risk at the breakout at 537. And if you're a bull, I would be very patient on buying the dips and make sure buyers are actually showing up before you just blindly buy. This is going to be that stage of euphoria and even blow off top where the market is just going up very rapidly and very parabolically with very large gaps to fill below. And that is not a market condition that is healthy and sustainable. It usually does lead in very sharp corrections. So understand the velocity of how fast a correction can occur, which means you should be even quicker to get risk off if we break down below support below. So I know I gave you a lot of information, but as I told you, this is the last video update of the week. So you need to make sure you understand these critical levels and have a plan now. And if we break below those, where the price action is doing all of the talking, then you need to know to get risk off. So you don't need to get risk off until price actually proves that we need to get risk off and breaks down below a critical support zone. So use 537 and then 531, and everything in between that is just intraday volatility and normal trading. Those are the critical levels to pay pay attention to. On the NASDAQ 100 triple Qs, we were up 1.31% today, and just like SPY, we gapped up outside the upper Bollinger Band at a brand new all-time high, and we did hit some very important price targets in the 470s, and we now have an all-time high price target gap at 468, which just like SPY is also a gap that has zero price discovery, which means we have never seen the triple Qs trading within this gap at any point in time. These are brand new all-time highs, and price action has never existed within this zone. So for that reason, I'm going to draw the same arrow that I gave you on SPY, and I do believe as early as Friday or early next week, we will come down here and fill this gap at 468. And then once that gap fills, it is then and only then that we will see if there's going to be buyers at these high prices of all-time highs, or if we are going into a deeper correction. And keep in mind, on the NASDAQ 100 triple Qs, the risk level is all the way down here between 459 and 460. So from today's close, if we went all the way down to the critical risk level, that is about a 3% drop. If you're getting risk off, the first sign would be the breakdown below 468, and then below 468, we could come all the way back down to 459. And if we break 459, it is definitely risk off, and the bull trend looks like it's rolling over and getting ready to die, and that could easily bring us down into the 440s and 430s. So take this seriously. As I'm telling you, the reward to the upside is not nearly as much as the risk to the downside, and that means smart bulls will lock profits, and the smart bears are now looking for low risk short opportunities. So when you have smart bulls selling and you have smart bears beginning to short, that is when you are going to get double the selling pressure, and we could start to see that elevator down. So I'm not saying it has to happen right now, but if we do not hold above this gap fill at 468, that is when I would expect to see the high volume panic selling. On the Dow Jones, we were down 0.07% today, and this is still the dagger in your side if you are bullish on the market as a whole, because why is the Dow Jones still looking so bearish and so weak if we have a very broad-based rally with strong breadth? So this index by far is the laggard of the year. It's only up a little bit over 2% year to date. And on the attempt to get the bull breakout above 391, we had a very bearish rejection all the way back down to the risk level at 387. So we can't say it's risk off yet because it's still above 387, but if it breaks below 387, it is very likely going to flush down to 377. You can stay bull above 387 because we are still above it, but if we do break down below it, get risk off, and the next bull breakout is above 391. On the Russell 2000 IWM ETF, we were up 1.54% today, and this is one of those trades we knocked out of the park because you can clearly see from the arrow that I was buying the dip as we approach 198 to 199. And then I was looking for a very powerful bounce up towards 210 and 214. And that all happened very quickly after the CPI data. We gapped all the way up towards this resistance between 206 and 207. And that was the first place that we were locking profit, which means now we'll need to see the bulls breaking above that resistance before we continue to get bullish for the upper targets at 210 and 214. So if you want to stay risk off below 207, that's completely fine. We do have a gap to fill down here at 201, but we are still above support at 203. I like 203 as a risk level, so you could stay bull above it, which means we're going to be trapped in a range between 203 and 207. If we break 207, we're looking for 210 and 214. And if we break down below 203, we're looking for a gap fill at 201. So I think that's very clear price action. Once we break that range, you'll know exactly where we're going next. On the ARKK ETF, we were up 2.08% today, and we closed a few pennies above 45, which means it is possible we are getting a higher high breakout, and that will be this break and close of a higher low and higher high above 44.7. So if you're extremely bullish in this ETF, that's your risk level, but I do think you need to be very cautious because we did gap up, and it's still possible we come back down to 44 to fill this gap. So just manage your risk accordingly. You want to manage your risk somewhere around 45, and I do suggest staying risk off still until we get more proof this is a bull breakout. On the VIX, we were down 6.45% today, and the VIX is all the way back down to the lows that we've seen all year long, which is all the way down here right around 12, and this is about the lowest you're going to see the VIX this year in this range before we start to see volatility. So I'm not going to change a thing about my prediction. I still think the VIX is going to start spiking very soon here, especially now that we've gone even lower. So expect to see a lot more volatility either by the end of the week and definitely by next week, which means the VIX could spike all the way up to 15 and possibly even higher. On Bitcoin, we are currently trading just above 68,000, and yesterday I told you that Bitcoin was in no man's land because we had the bearish scenario of the double top breakdown below 67,000, but we also had the bullish retest of the breakout at 66,000. So this is why I'm calling it no man's land, because I don't care to trade it if it has a bearish look and a bullish look. I would prefer for all of the stars to align. So I think a little more patience here is warranted. If we're going to be bullish, we're going to break above this high at 70,000. And if we're going to be bearish, we're going to break the low at 66 to 65,000. So I would wait for one of those events to occur, either the bear breakdown or the bull breakout. And then if you want to trade Bitcoin, then you can trade it in the direction of the price action breakout. On Nvidia stock, we're up 3.55% today, and Nvidia did make a brand new all-time high, which is going to bring us into the zone of resistance between 126 and 128. And this is one of those stocks, just like we had Tesla a couple of years ago, where it's just going to be a bull trend until it's not. And if it's not going to be a bull trend, we are going to need to break down below the daily 5 EMA. And at this point, that is going to be a break and close below 122. So until this bull trend rolls over, you can stay long on this stock. But as we start to break down, which is now going to be a breakdown below 122, that is when you need to consider getting risk off, because we could come all the way back down towards 106. And on the way there, we will be looking for possible support right around 115. So watch that very strong support at 122. If we break below it, that's a sign of weakness, and that could be your sign to get risk off. On Tesla stock, we were up 3.88% today, and we did break back above 173 after only spending one day down below it, and we did get very close to that risk level at 167 outside that lower Bollinger Band, and the buyers stepped in, and we did see an increase in volume today. So it could be possible that Tesla is finally ready to get back on that bull, but I do want to see it breaking above 180. And if we can start to close above 180, I do think it's possible to break 185 and go to 207. So 180 is still that line in the sand that I want to see broken before I get bullish, and we just haven't seen a close above that level yet. If you don't want to wait for the bull breakout above 180, then you can stay long above 167, but I do suggest getting risk off below 167. On Apple stock, we were up 2.86% today, and Apple is doing a historical move here with the very parabolic 2-day move, and we did hit all the way up to the price target at 218, and then near the close we did finally see profit taking, and we closed down near the price target at 212. And this is just not a move I can suggest chasing. If you missed it, you missed it. I did suggest locking profit between 195 and 198, but you also have to remember that I got bullish all the way down here around 169 to 170. So that move from 170 up to 195 to 198 was a very successful trade, and while you could have made more if you held it longer, I don't believe as traders we need to be worried about perfectly catching bottoms and tops. If you have FOMO and you think it's time to buy Apple up here, that's completely up to you, but I would suggest locking profits and waiting for a more clear buying opportunity. And at this point, if we zoom out, we are likely going to get a retest of this all-time high breakout, which means we could see Apple coming all the way back down to 198. Not saying it has to happen, but there's a very good chance, statistically speaking, that we will come back down to 198, which means if you are buying all the way up here, that's about another 6 to 7% drop. So I don't see the risk reward to chase this thing long. I do think it's likely coming back down towards 198, and I do think it could happen very quickly because this does look like a blow off top look. And then very quickly, I do want to look at the financial sector, because one thing I was noticing today is it is looking like it's building out some sort of head and shoulders pattern. And if you just draw this out as if this was the neckline, it does look like we are starting to break down. So this is a very big concern of mine, because the financial sector is obviously very important for the S&P 500, and it does look like it's getting lower highs and lower low breakdowns. So I would be aware of that, and I would put that on your radar as something to track as an indicator. So jumping back over to the S&P 500, the next couple of days should be very volatile. I do believe we are coming down to fill this gap, which means in the short term, I think you need to be risk off and looking for lower prices. But in the longer term, if we continue to bounce off support within this bull trend, there's no telling how high it can go. That is called a blow off top, where the market just continues to go higher. No matter how many people are doubting the bull market, it is always going to be a bull market until it's not, which means the only thing that can tell us it is no longer a bull trend or a bull market is price action breaking down below critical support and proving to us that we are out of the bull trend. As you've known, I've been bullish since 2023 when many people were still very bearish. And it is simply because I block out the noise and follow the chart and follow the price action. And that is going to be important now more than ever, because risk is rising the higher we go. And if you are continuing to buy into this bull market without any risk management strategy, one day when this bull market does roll over and start to die, you are going to be caught holding the bag. So make sure you have a plan when it breaks down how you are going to manage risk. Until we do break down, it's okay to stay long and continue to swing long in a bull market. I always suggest it is easier to buy the dips in bull markets than it is to try to short and call for a top. However, I am warning you right now that the upside reward is becoming more and more limited at these prices, and that is something I want you to be very cautious about. So it's a bull trend until it's not. You can stay long. We have very clear risk levels, and as long as you're managing your risk, you are going to be a very profitable trader. If you want to come crush this market, consider joining the Stock Channel Discord server where you get access to all of my intraday updates, my technical analysis, and my trade ideas. You can find out how to join my Discord server by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.